This is gonna be a quick video on my valuation of Restaurant Brands International, ticker symbol QSR. The company owns Tim Hortons, Burger King, and Popeyes. For the people who are not familiar with Tim Hortons, it's basically Canadian Dunkin' Donuts. So the company generates revenue from three sources: franchise and advertising revenues. This consists primarily of royalties and advertising fund contributions based on a percentage of sales reported by franchise restaurants, and franchise fees paid by franchisees. Property revenues from properties the company lease or sublease to franchisees, and sales at company owned restaurants. The pandemic had a substantial impact on the company. Their restaurants were forced to close or operate at limited capacity. Thankfully, at the end of March 2021, 95% of their restaurants were open worldwide. Now, let's go into my assumptions for my DCF model. I assume a revenue growth of 15% for year 1 as the economy reopens, and 7% for years 2 to 5 from the company increasing restaurant sales and accelerating net restaurant growth. Revenue growth would approach the risk-free rate by year 10. I used the US 10-year Treasury as the risk-free rate. I assumed that operating margins would recover to pre-pandemic levels, 35% by year 2. I have the company maintaining those margins going forward. For the people who are wondering why their margins are so high, it's because of the franchise model. There isn't a lot of cost to permitting a third party to use their brand name in return for a fee. Restaurant brands would maintain their tax rate around 7.75% to year 5. Afterwards, their tax rate will move towards the marginal tax rate of 25%. I assumed that the sales to capital ratio would return to pre-pandemic levels, about 0.35, not much different from the current year. I think the low sales to capital ratio is the norm for companies with a franchise model that operates in this industry. McDonald's looks to be in the same situation. I calculated a cost of capital of 5.37% and assumed that the company will maintain that figure going forward. This gets me a fair value of $52.53. At the current trading price of $69.18, the shares are 31.7% overvalued. I am going to trust in my valuation and sell my position first thing Monday morning. The company makes up a small position in my portfolio, so this will just add to my cash balance in my trade account. If you like my content, please like, share, and subscribe. Thank you for listening.